Hey, my name's James Nicholson. Welcome to my YouTube channel. Now, in this video, we're going to talk about why the Bank of England should cut interest rates. It's not my opinion. It's a very clever chap called David Blanchflower's opinion, and he was a Bank of England policymaker during the last financial crisis. So we're going to delve into that here today. So make sure you stick around to the end. While you're here, make sure you smash the like button on this video, subscribe to the channel and hit the bell. We're one of the only property channels with daily content. So make sure you stick around and learn all the great stuff on property investing in 2023 and beyond. So we've got the Bank of England and the Federal Reserve meetings this week, and it was looking like the last few days that they were potentially going to pause interest rate rises, and that was the opinion. But things have changed, and now the signals are that they're going to ignore what's been going on with the banks, and they're going to focus more on inflation, which is where they've been working towards anyway. Now, what we're looking at is potentially getting a half base point rise in America and a 0.25% base rise in the UK. Now, that's going to hit lenders, that's going to hit banks even more. And what David Blanchflower is saying is not only should we pause interest rates, he feels that this month we should drop the base rate in the UK, the Bank of England, down to 3%, which would be a 1% drop. Now, that would be staggering if that happened. I don't think that that's going to happen. Now, why does this guy have any opinion, and why should we potentially listen? Well, he was one of the policymakers, one of the people voting on this stuff in 2008. So he was there at the difficult time that we had when the banks collapsed and we had all those bailouts. And he is suggesting that the banks just can't cope with any more interest rate rises at the moment. And he's saying that if you've got to look at two things, inflation or the banks having a crisis and having a bailout again, he thinks it's more important to save the banks right now. Because if you look at it, inflation potentially was going to come down by the end of the year anyway with a wait and see approach. But if the banks suddenly, now we have a 2008 scenario, that is going to be very difficult for a lot of markets. Now, let's relate this to property. Now, we've said that what actually is happening in the market is not quite as bad as 2008 for property investors, because you can't get 100% mortgages at the moment. You can't do self-certification, which means you can just make up how much you own, which a lot of people did in 2006, 2007. Those products don't exist anymore. And so people are not as leveraged. However, they are being hit hard with the double whammy of high interest rates or higher interest rates, high inflation at the moment. And so if the banks are to start failing and we start getting more bank runs, where I see this as risky as a property investor is money is just not going to become available. We had that temporarily last year, didn't we? We had at the end of last year, after the mini budget, where the banks just pulled their mortgage products for a week or so, 2 weeks maybe tops. That causes carnage. Now, if you're doing a project, that could be quite risky for you. So people that are doing buy, refurbish, refinance, rent projects, make sure that you've got other options to fund your project. You don't want to be just relying on getting off a bridging loan or moving your project onto a mortgage to get your cash back out, because you might end your project right when this gets really, really interesting and a very, very sticky scenario. And so that's where I could see problems. Now, if we do go into another bank crisis, how they fix that is cutting the interest rates. Now, this will potentially lead to house prices going down further than what the OBR are predicting and what we're expecting at the moment. So if the banks do start to fail and we need more bailouts, that is going to mean we are going to get more crisis coming along the way, because there'll be less lending. There'll be people coming off deals that now can't get a new mortgage or new borrowing. It will just be difficult because they'll be going on to variable rates. That's why it's difficult, right? So if you come off a deal and you're on a good deal at the moment, and then you want to try and fix a new deal, but you can't, and then you get stuck on the standard variable, that's going to make things a little hairy for a lot of people. Then you will get people that will sell below market value even more. And so this potentially could be something that could really start to snowball. And so when we're talking about house prices, if we don't have a banking case scenario, then the OBR reports and what we're looking at, data that we talked about, or a video we got coming out tomorrow, we're talking about London house prices, all of this stuff stands. But if we have the banks start getting bailout, then this is going to be a very, very different scenario. What do you think about this? Do comment below. But I think that, look, if the guy that was in amongst all of this and was helping out has a fairly strong opinion that we need to cut rates now, then maybe he's right. But it looks like the Bank of England aren't going to listen to this information. They're going to carry on with their monetary policy, which is just focused on beating inflation for now. It's a very, very tight scenario for everyone involved. I'm glad that it's not me that's having to make these decisions, because no one can be certain what will work. Would raising interest rates to 6% work? No one knows. Would that bring down inflation for sure? Nobody knows for sure. And so it is a real tightrope to get the balance right, to make sure that markets don't crash, house prices don't crash too much. The recession, if they push us into one, isn't too deep. It's going to be an interesting few weeks. We're going to make videos, obviously, this week after the Federal Reserve do their interest rates, after the Bank of England do their interest rate stuff as well. So make sure that you do subscribe if you didn't already. We'll have our opinion on that straight after. Thanks for watching. If you want to know how to buy a house for £1, that's a lot easier. Go and watch this video right here.